Hi everybody, welcome to another update on the gold forecast index, the holy grail to predicting gold prices. In my last video, I was pretty bullish on gold in July, so let's see what happened. So July, it was 2,330 and gold has gone up. So I was right again. So let's look at a new data point for today. What does the gold forecaster index tell us? Let's look at the big picture. Gold is going to go to 5,000 in the long run. So if you have a long-term view, it's always good to buy gold. So latest data point. This is the gold forecast index and is a leading indicator for the gold price. This is the holy grail. And as you can see here, new data point points to positive gold forecast index, which means gold will go up. Okay, gold will be going up. Taylor roll rate has rebounded a bit, so we are back in the positive. That's good for gold, but it's not that good as before. But let's see where this goes. Misery index is still flat. I had hoped this would go up with higher unemployment and higher inflation, but inflation has been pretty weak lately, has been going into disinflation now. So let's see. Yeah, unemployment, I think, will go up, but inflation could actually go down. Real output is bottoming out. This needs to go up for gold to go up. Chile and Peru, let's see. Production up, that's not good for silver, but okay, the long-term trend is down. And in Peru, we have, yeah, this is grade ring, so that's probably a good sign for silver. Less byproduct. Gold demand is flat actually, but I think that central banks will keep buying, GLD will start buying, LBMA, COMEX will start going up. So I'm still optimistic that this GLD tonnage in the ETFs are starting to go up, which will mean that gold will be making new all-time highs. COMEX also starting to bottom out. If this goes up, then gold will go up. LBMA, same. If this rises, then you will see new all-time highs in gold. I still see less China gold buying. This was historically much higher. Looks like the Chinese are buying less gold. So let's see how this evolves. This is bad for gold. If there's less demand, then gold will not go up that much. For silver, we also see the bottoming out. So if this goes up, silver will also go up. Yeah, you can see that the SLV ounces are rising. That should be good for silver. But lately, silver has not done well. Not sure why, maybe the disinflation has something to do with it. COMEX silver is also going up. So what's happening with the silver price? Not sure. Retail demand is probably low in silver. Okay, and next up, central bank demand still green, but not that much as before. China still has stopped buying gold. Actually, I have a post on that. Actually, China has not stopped buying gold, which is positive. You can see that Chinese reserve composition is rising. The gold reserves are rising, so that's good for gold. Retail demand is still very weak, as you can see here. Gold and silver ounces are very weak. So retail has not bought gold yet. Premiums, you can see that the premiums are still very low on silver. There is no interest at all in buying silver in the West. Still very low premiums. This is not good. China premiums have rebounded from negative back to 0.3%. That is positive. I like to see positive China gold premiums. I want to see this even higher. If this can go back to here, then we will see much higher gold prices. China silver premiums are still high, so that is a positive for silver. But in the West, we see premiums at 3%, which is at rock bottom. No interest in the West. COT report, latest open interest has dropped a bit, so it is improving. Shorts have been covered a bit. There's still some room to cover more, but yeah, this is good. This is good news. I want to see open interest come down even more with the same gold price. So we are bottoming out in gold. This is not a top in gold. This is a bottom in gold. Swiss franc is improving. Good for gold. This thing is bottoming out. The tips starting to move higher. That's good. Real yields are still negative for gold, but I can see this improving with rate cuts, yeah, especially rate cuts. Seasonality is, yeah, we are in August, so we are at rock bottom here. So next month should be very good for gold. Also, yeah, for silver, it's not that great. It's going to be flat now. As you can see here, August bad for silver, and then good, and then we're bad. So yeah, silver is going to underperform gold. That's what I think. Yeah, this is an important one. I just saw this chart about bullish percentage index, and there's a lot of negativity in gold now. It has gone even negative below this line here, the 25 line. That means they are bearish, which means this is probably a bottom, and we should go higher in gold. Big picture, money supply has not, currency in circulation has been flat, so less upside, but gold is still going to move up while stocks are going to go down. So this is the equilibrium. Stocks down, gold up. So I'm all in gold, not in the stock market. 30 to 10-year ratio has shot up. This is important. That means that gold is likely going to go up. This is a breakout. Same here. This is the second derivative. As you can see here, we are above zero. So gold is going to have a good percentage change year over year as this moves higher. Google Trend, I am sure that there's no interest in gold at all at this point. Debt to GDP, we have 35 trillion in debt, new all-time high, and GDP is going to be weak, so gold is going higher. Easy. Defense spending probably going to go up, which is good for deficits and good for gold. Near-term forward spread. This tells us that there are going to be rate cuts, which is good for gold, and an inverted yield curve is also good for gold because money is going into cash and high value currency like gold. And the latest data is minus 1.3, so that means this will move back in the plus at some point with higher gold prices. rate cuts. Latest status here is that we will have 5 rate cuts, 3 to 5 rate cuts. And if we see rate cuts, every time stocks drop and gold goes up. Stocks drop, gold goes up. So just buy gold and you will be fine. Proxy Fed funds rate was also dropping, so that's good news. We will see rate cuts, and this is another evidence. The 2-year yield is dropping like a stone, so the Fed will need to follow. The Fed always follows the market. Other than that, maybe some bank failures are coming. The cash is dropping a tiny bit on the banks. LIBOR rate futures curve is telling us that gold is going higher. So 2,400 to 2,800 in the coming years. So most likely gold will be going up. Very good investment. I want to look at copper as well. Maybe some charts here that are important. Global real economic activity is flat. Yeah, I think stock market is going nowhere. Important here are the inventories. Inventories keep going higher, which means copper will be dropping. So I'm not invested in copper. There's still too much inventory in China. So that's not the place to be. You can see here the credit impulse is going negative. So copper is now dropping probably to the 3.5 level. Somewhere here you could start looking at copper, but I'm not buying at this point. The Shanghai is also down. Shanghai index down. This long-term pattern, long-term triangle pattern is breaking down. So not good for copper. Yeah, copper balance, I think is going in surplus, not in deficit anymore. Oh, now it's August, so this is also bad for copper because we are going down seasonally. So sell your copper, Marnes. Yeah, China is exporting copper. Yeah, Danny still has the same upside, but we will see about that. Also, this one. Inflation is dropping. This is not good for copper, also not good for silver. That's a big drop. So we have less inflation now. Let's see where that goes. I'm not in silver and copper. And here as well, leading index is almost going negative. So that means more weakness in the economy. Bad for copper. It's not looking good. Housing market was also at the bottom and breaking down. So China housing market also down. This here, it has gone up a bit. This is the bonded copper premium. Has improved, but I think there's more downside in copper. We need to see this rise back to here before we get bullish copper. So more downside is possible in copper. On to some macroeconomic data. Money supply, how is that going? Money supply is rising again, so this is good for gold. Central bank balance sheets. It's all going down. So they are all selling their assets But you can see here that it's trying to make a bottom, so they're not selling that much anymore. That's good for gold and even for stocks because there is more liquidity then. But yeah, economy is not doing well. Here we see that the reverse repo is going down. It keeps going down. Janet Yellen still has a lot of cash left, but the reserves are now dwindling. So bank reserves need to go back up at some point, and then liquidity of Janet Yellen and the reverse repurchase agreements will need to go even down more. We'll see where this ends. Probably in November something will happen because liquidity is drying up. Deficits. So the goods deficit has improved in June, but worsened for the services. Okay, long-term trend deficits are still down, but not down that much. Okay, export price index down, imports up. So that means more deficits are coming. For commodities, import and export prices down a bit, so less inflation. This is still this is Q2 numbers. Q2 numbers were actually pretty good, up from Q1, so higher GDP. Yeah, it's not that bad. The economy is not that bad, but we will see in the future what's going on. Here the trade balance has improved a bit. So it's not that bad, but the trend, the overall trend is still higher deficits. Okay, which is good for gold. Capacity utilization tells us something about inflation, and it has risen. So more capacity is being used, that's inflationary. So that will be good for the CPI to rise again. That's a leading indicator, capacity utilization. Fed funds rate, we already talked about that. 3 to 5 rate cuts. Labor force participation vs debt. If you have the lower labor force participation, then probably then the debt will go up. So this is inversely correlated, and Game of Trades thinks that labor force participation will drop. That's possible, and then higher debt to GDP. 3 rate cuts. You can see that here. The probability of more than 3 rate cuts has gone to almost 100%. So that's good for gold. I wanted to show you this oil vs yield curve as well. So we are still inverted, and the yield curve is inverted. You can see that in 2000, 2008, 2020, and today we are inverted. And whenever we have an inverted yield curve, oil drops. So I'm not in oil because we are still in an inverted yield curve. Wait for this to go back in the plus before you buy oil companies. It's as simple as that. So no oil in the portfolio. China refinery throughput is cratering. China doesn't need that much oil anymore. Gold up, oil down. That's what Citigroup is saying. By next year, they think oil will be at 60 and gold will be at 3,000. So that's what I'm positioning for. Gold miners like high gold and low oil because less inflation but higher gold prices. Lithium, lithium is looking extremely weak. It's currently at in the $800. Amazing. Those lithium companies have created 75% from the top, and it's not going to end because there's more supply coming online while the demand is not going up that much. Probably it's going to keep on dropping and staying flat until 2030. Here we have more demand than supply, so I would just avoid lithium, just forget about it and never look at it again. Container rates are spiking, but lately they have come off. But yeah, if you see these spikes in container rates, normally inflation will follow. So there could be some inflation coming in the second half of this year, which is actually good for gold. ETFs, as I said, gold ETFs are now bottoming out. This could be a bottom. Of course, it can go down more, but this looks like some bounce to go higher. If it goes higher, then gold will go up even more. So look at the gold ETFs, they are starting to bottom out. This was a very nice article about China secretly buying gold from Jan Gold on Twitter. He saw something peculiar in the last 2 years. SGE withdrawals minus China net gold imports at zero, which suggests that China is still buying gold, even though they don't report it. That's important because that means gold is supported and will go up. India cut gold import taxes, extremely big move from 15% to 6%. That's a big drop in taxes. And that will boost gold higher, of course. I expect that India gold imports will start rising, and this will boost gold higher to the 2,500 level. Both gold and silver imports will go up. So here, taxes down and more silver buying, more gold buying. Okay, that's important. So we stay in gold miners for the moment. They are making a lot of money. This is the free cash flow for the coming years. It's rising. So if you just buy companies with good free cash flows and a rising gold price, you should be doing well. Okay, you should be doing well. These are very cheap stocks with the EV to free cash flows around 5, 3 to 5 to 6. That's a very good price to buy, especially when gold is going higher. And I do think gold will be going higher. That is the conclusion for this month. Probably we are going to see 2,500 very soon. And yeah, it's because the gold forecaster index is positive. This chart has gone positive. And the gold forecaster index leads the gold price 2 months in advance. As you can see here, when it drops, then the gold price drops. When it goes up, then it starts to go up. I expect this move in the plus, and the trend is actually going up. This will result in gold prices going up. Okay, so very good month, very good outlook for gold, and we just stay in there and look at this. Everything is down, but gold is down the least, which is a very strong market in gold. Every dip is getting bought. Okay, I'll see you in the next month. Goodbye.